Okay, Group D dividends. YieldMax just released this morning. And here we got the summary of some of the monthly pairs based on the single stocks. So if we filter these by percent return, we can see SMCY was the best, followed by Misty, and then Block or XYZY came in pretty good again at a 4.27%. Then it was AIYY, Amazon, Disney, and Apple, respectively, in that order, going from greatest to least. As far as what the dividends were, you got SMCY $1.61. Misty, I think this is the lowest in Misty's history, but it's still $1.24, which is still good for 5.78% on the month. So annualized, take 5.78 times 12, that'd be your annualized distribution. Let's see, we got XYZY 44 cents, AIYY 16 cents, AMZY 59 cents, Disney 42 cents, Apple at 27 cents. So overall, yeah, we got SMCY was the highest at 7.8%, the Misty at 5.78%. Everything else was under 5%. And then just jump in as far as how these funds are looking in terms of overall market cap. We got Misty, the biggest fund, and these are just the monthly ones, pay on a single underlying equity. The ETF list that's included, I guess you can see here is on the right. But Misty passed the 5 billion threshold, so that one's growing like crazy. Second, we got the NVIDIA one at 1.7 billion, Coney 1.3 billion, Tesla's just over $1 billion, and then Palantir's is 616 million. And everything else is pretty similar underneath the line. Those are the top 5. Maybe if you look at the 6th one, maybe Amazon or SMCY. SMCY has been doing pretty good, so I'm sure that one's been growing. But to dive into Group D, I know since Misty's the most held fund, figured I'd jump into that one here. So as you can see, distribution per share, Misty's came in at 1.238. You can definitely see that since inception, that's definitely the lowest, but it's been in line where it's been lately, with kind of the outlier being the May distribution. Let me zoom this back just a bit. There we go. Get a little everything in there. But then let's see, as far as how Misty's been doing overall, we got the price plus the cumulative distribution. So the blue is the price of the ETF and the green is the cumulative distribution. Misty's one of the stellar funds that started at 20, I believe, and then is currently sitting up here in the 60 range. So over 200% return on your money. You can see the cumulative dividend has grown to 39.61. So you've almost gotten 2 times your investment back just in the dividend since the inception date. And the underlying YieldMax ETF is hovering above where it came out at. So you're up both on the underlying, or both on the YieldMax component, and then your cumulative distribution is quite large as well. I just want to, as far as how we're comparing versus MicroStrategy, the underlying stock, clearly only underlying stock would have been the best option. These assume a $2,000 starting price. So either $2,000 invested in a strategy or MicroStrategy, and then $2,000 invested in the YieldMax ETF. Difference between the blue line and the red line is the red lines with reinvested dividends. So you can see the reinvested dividend option is the best approach. But overall, even though Misty's been a very good fund, it is trailing the underlying equity, which is pretty expected for these funds. It's rare to find something that's actually outperforming the underlying equity. But then again, a lot of people invest in these to get the cash flow dividend, which underlying equity doesn't necessarily provide. And then, yeah, here's your total return, I guess, in purple here. So Misty's chugging along. Cumulative dividend keeps increasing, and the ETF price has been right around 20 for the last few months, it seems like. It'll be interesting to see if they can get the actual distribution per share up a little bit. But overall, Misty's been a pretty good fund. And then as far as the one that outperformed, I think everything was this SMCY. SMCY has been a good fund, I guess, since its inception. It came out with that massive dividend right away, but has been pretty consistent in this, let's see, I guess about almost like $1.50 to $2 range, with some of the months being slightly under or over. So the $1.61, kind of right in line with where it has been. As far as how the fund's been performing, it did come out, I believe, $50 a share. It's currently, is that right? 20? Let me just check that. Don't follow the SMCY. Yeah, just over 20 a share right now looking at it. It's still paying a good dividends. Overall, you're probably not on the fund if you bought it at inception date, but a lot of that was due to the underlying equity decreasing quite a bit and the YieldMax fund decreasing as well right off the start. But since then, it's kind of steadily chugged higher. I'm assuming you would have bought it after the inception date. I believe it came out at $50 a share, and it's already paid a $21.80 dividend. So that dividend is adding up quickly, even though the underlying share price has fallen considerably. I think those are the two I'd like to cover today. We got the other ones on the website, which I will provide. Maybe if you just want to take a look at Amazon, I think that was like the sixth most sold fund of these underlines. And AMZY's dividend is quite good at 59 cents. And see, if you were to draw an average line, maybe the average line would be slightly above, but overall the dividend's been pretty good. As far as comparing to the underlying equity, so in this case, look at the underlying equity. Amazon has been chugging higher, but when you compare, you can see actually the non-reinvested dividends is underperforming, but the YieldMax reinvested dividends and underlying equity are virtually the same. So here's a case, and the underlying reinvested dividends option was actually above where the underlying equity would have been if you were to just bought that. As you can see here in the red line, or actually, excuse me, the red line is owning the stock, and the yellow line is the reinvested dividends. So I spoke wrong. The reinvested dividends was actually overtook the underlying stock. But now with the rise of the underlying equity of the Amazon stock, it caught up here. But overall, you can see the YieldMax funds performing pretty well versus the underlying equity. Of course, with the YieldMax funds, you get the income. But yeah, I guess that's a case that maybe you don't see all too often. But yeah, it's interesting. Here's a breakdown between how the AMZY price has been performing versus the cumulative dividend. We see AMZY about 16. It's held pretty consistent, to be quite honest, for a YieldMax fund. 20, and it got hit a little bit during the initial tariff conversation, but then since then bounced back from 15 to 16, 35 or so. So then there is AMCY. Let's see, as far as XYZY, last month that was like the great dividend that one had. It was the best performer in the group. I remember that. Now the dividend halved back to where it was around the 40-cent range. This one, once again, the underlying stock is slightly better, but the YieldMax funds are just below that. And then here's a look at the price plus the cumulative distribution. So initial investment, when this came out, if you would have put $20 in it, you've already got $17.80 back in dividends. And your YieldMax fund is sitting at the roughly $10 a share. Yeah, I guess it got hit a little bit. Let's see, right around the February to March timeframe, the underlying equity as well as the YieldMax fund took quite a hit. But since then, it's been maintaining ground, and it did have that one stellar dividend last month. So maybe a fund to watch going forward. Purple, there's your total return. There's kind of the underlying equity price if you were to buy it into XYZ. Yeah, I'm just going to go through all these, I think. Just take a look at them just from my own good. So Disney, that one's actually been performing a little better from a distribution perspective. It's 41 cents, less than it was last month at 55 cents. But hanging in there. If you were to start at 20, you can see you're positive on your investment. You've almost got 50% back in terms of cumulative dividend. As far as total return, you can see that's where we are, 20 to almost 25. Whereas the underlying equity price, I guess recently Disney has taken off, but hell then, a few months ago, it was pretty stagnant. And then we'll jump to Apple quick. Apple might be an interesting one to look at. That distribution was quite low, the lowest I guess it ever has been. Is that right? Disney was only, let's make sure I got that right. That is not correct. That is, oh, I see what happened. So Disney is at 40. I will update this. It's at 41 cents. It appears that 4 got truncated, so it's 41.60. So that's a good thing. I guess that's why I look at these. But I'll make sure that's updated to be 41.60. So it should be above 40 cents. The dividend actually was quite good for Apple. So that should add to this. But as far as, let me take a look at Apple quick. Yeah, the Apple one looks to be off a bit. I'll take a look at that. Perhaps it's pulling in the wrong data. Yeah, don't look at Apple. I'll have to check that. Good thing I'm looking at these and make sure they're actually correct. Jump over to AIYY. As far as its distribution per share, I believe Apple actually is pulling in AIYY info. for some reason, because AIYY 16 cents is the appropriate dividend rate. Yeah, I'll go take a look at that. Apparently those got overlapped with one another. So this is the appropriate one for AIYY. We'll update the app. We want to make sure it's corrected. But AIYY, that one, of course, was hit. Let's see, it was up to, it's been getting slammed from the start from the underlying equity perspective. As you can see, every kind of down note on the underlying equity has hit the YieldMax fund quite a bit because you're capped on the upside, but you take the full downward hit, basically. So you really don't like to see charts like this that kind of go up and have aggressive downturns and aggressive increases followed by aggressive decreases. It really hurts the fund. If anything, you want to see the fund stay like a stable line, or the best would be like a slight incline vertical higher without too much price volatility up or down. This one's kind of not what you want to see because it hits the funds. And then when it did have this rapid rise here, I'm sure the YieldMax fund did not take that full increase as it got capped by the calls it sold. And you can actually see this. Let's look at the YieldMax fund. It's here in blue. So the underlying equity price shot up, let's see, from September to December. So you can see September to December, the YieldMax fund also went up, but not nearly to the same magnitude because it's capped on the upside. Then once it started its plunge again, you can see the YieldMax fund also continued that plunge and basically took, probably from a percentage perspective, it took a lot of that boom right through there. So that's a chart you'd want to avoid if you're doing these funds. And that's if you would start with $20, you're currently sitting at $14.88. And this cumulative dividend has definitely come in and helped you quite a bit. So I guess that's an update for Group D. Overall, not too bad. SMCY was the outperformer. Misty, although paying its lowest dividend to date, still not too bad. I will be sure to update this aptly sheet to show that. I don't think it's a widely held fund, so I doubt many people are tuning in to be updated aptly. But yeah, overall, thanks for tuning in today. Going forward, I'm going to try to, as I got like Coney here, I got the Coney details, which shows what exactly Coney owns and such, and where the calls that are shorted sit at as far as the strike price and expiration date. I'll look to do that for Misty here, so I'll look to update that here shortly. But thanks for tuning in today. Hopefully you're doing well from a dividend perspective. Until next time.